Back, everybody. I hope you had a really enjoyable and relaxing lunch. It's been a fascinating day, and I think that one of the more interesting themes that's been recurring throughout the day is this ability to monetize, if you like, the business of space. And our next panel session is really going to talk to that and is going to have some fascinating insight about what it means to actually attract investment into this space. So the actual session itself, we remind you that you can ask questions. There will be a Q&A at the end of this. Look for the venture capital session and make sure that you're logged into that to make sure that you can see your questions at the right time. So this is specifically about deep tech and venture capital. The venture capital fund manager is taking a more hands-on approach to deal creation, working at an early stage with investors and entrepreneurs to shape the structure, function and strategy of a new company from the beginning. So we've got a really interesting panel. It's going to be facilitated by Dr. Stephen Rodder, who's the Executive Director, Innovation and Commercial Partners from the University of Adelaide. Dr. Rodder is joined by the following panellists: Barbara Swanson, who is the Chief Revenue Officer at Myriota; Leticia Garrio-DeCao, and she's the co-founder and CEO of Global Space Ventures, and she's joining us all the way from the USA, but you may have picked that up anyway when you see her jumper. It's fantastic. We also have Reg Carruthers. He's actually from he's the Executive Director from Defence and Space. He's actually filling in for Richard Price, which is, thank you very much, Reg, for joining us on that. Chris Kirk, who's the General Manager of Stone and Chalk; and Ulrich Ferner, who's the principal of Right Click Capital. And so now, without further ado, I will pass you over to Dr. Rodder.
Thanks very much, Carolyn, and thank you very much, everyone, for being here with us today from wherever you might be in the world. And just in terms of, I guess, providing a bit of scene setting and context to the panel discussion today, I think we're pretty familiar with the concept of launching rockets and deploying highly technical satellites, putting rovers on the surface of Mars, and spacecraft to sample the surface of asteroids that might be travelling at 28 kilometres a second or 100,000 kilometres an hour. And these activities have historically been led by dedicated government agencies under initiatives that easily run into the hundreds of millions, if not billions of dollars. And they've been largely enabled through the existence of extensive research and development programs pushing the boundaries of what's possible. Importantly for this, I think, session and where we're heading in this sector is the investment of this capital and human effort for well over half a century that's really opened up the accessibility of space by driving down the costs and creating the opportunities to commercialise space and space-related technologies in ways that haven't been possible before. Indeed, the emergence of Space 2.0 sector has been driving an increased level of activity and investment across many different fronts, from the aspiration and direction set by companies like SpaceX and the role of government in supporting appropriate regulatory and policy environments for the commercial opportunities afforded by space, to how fund managers work with innovators, entrepreneurs, and incubators to develop a pipeline of deep tech companies, supporting them from startup through scale-up and globalization. And of course, the role of universities as pivotal sources of innovation, research and development capability, and of course, as educators of the future workforce. This is certainly the case for the University of Adelaide, where I'm from, where we have defence, space and cyber industry sector as one of our main areas of investment, together with our presence and expanding list of activities at Lot 14 here in Adelaide. In fact, today the university has announced the Andy Thomas Centre for Space Resources, which connects the university's specialist capabilities in artificial intelligence, autonomous systems, mining engineering and advanced materials to global efforts in off-world exploration and habitation. Now, these all are, by their very nature, deep tech areas. In addition, we've announced the appointment of Professor Charles Alachi as an adjunct to this centre. Professor Alachi, of course, having spent 15 years as a former director of NASA's Jet Propulsion Laboratory. More information about both of these is available through the university's Space app in a video from Andy Thomas himself as Australia's own NASA astronaut. Now, established a little over 2 years ago, the Australian Space Agency, headquartered here in Adelaide, South Australia, is charged with the responsibility of developing national capability and leading international collaboration, all with the aim of positioning Australia to benefit from what is a rapidly growing and global space economy expected to be valued in excess of $1 trillion by 2040. It is envisaged that the nation's domestic space industry will triple in size to $12 billion by 2030 and will be a leader in the creation of thousands of new and highly skilled jobs. But how? How will this happen? The interplay between government, investors, innovators and entrepreneurs is the focus of this afternoon's panel discussion. And each of these groups has an important role to play in the success of deep tech companies in a world where being global from day one is vital. Simply operating in isolation won't work if we're going to try to achieve the aspirations that we do in success and scale. In my role at the University of Adelaide, working with investors at an early stage to help shape the form and direction of what might a potential new company look like is certainly something that I'm experiencing more and more, as opposed to the more historic and traditional way of investors simply waiting for business plans to simply cross their desk. In addition to this is the potential new challenges faced by investors in deep tech for those companies that are heavily focused on defence technologies, where this might actually limit commercial opportunities for civilian markets, or companies that have single customer applications. This panel session puts these topics front and centre from a broad range of perspectives, international, local, and through government. Before I move to our panel, just a quick reminder that you can participate in questions and answers later in the discussion, as Carolyn's highlighted, and I certainly encourage you to put your questions through from the Space Forum app. Now, in terms of introducing our panel, I'll start with Letitia and ask if you can introduce yourself and give us a bit of background to your experience in global space ventures.
Hi, everyone. So I've been on both sides of the table as an entrepreneur and as an investor, and I really very much look forward to this discussion. I was a co-founder and president of Escape Dynamics, whose beamed energy propulsion technology was added on NASA's roadmap. I'm also an early investor in SpaceX and continue to remain active as an investor in the space sector and in deep tech in general through my firm, Global Space Ventures.
Great, thank you very much, Letitia. Ulrich, across to you. If I can.
Cool, very good. Hey everyone, so I'm Ulrich at Right Click Capital. Right Click, we are a very early stage fund, so pre-seed to Series C. We also are the Australian fund in what's called the Draper Network. So for those of you who've heard of the US fund DFJ, it used to be called the DFJ Network, same thing. And given today's topic, just something for everyone to be aware of is that SpaceX, also talking about SpaceX, are also an alumni of the Draper Network many years ago now though. And so there's a Draper fund in Singapore and London, etc., and we're the Aussie fund. And we, as I said, focus on very, very early stage startups. About myself, so very much an engineer by training, also an ex-founder and ex-employee of a couple of different startups in Boston. And you know, people usually call me Australia's most technical VC, and I lead Right Click's deep tech practice.
It's a badge you wear with pride. Chris, across to you, if you can talk to us a bit about yourself and Stone & Chalk.
Hey everyone, great to be here. Chris Kirk from Stone & Chalk. My role is to run the startup hub here at Lot 14, and Stone & Chalk's a non-for-profit that exists to connect and propel entrepreneurs trying to solve some of the world's most pressing challenges. We help startups right from idea through to Series A, B and C, and to date have helped startups raise about $550 million across a range of different industries. The Startup Hub at Lot 14 has been open for a year now. We've got about 200 entrepreneurs working across a whole range of future industries. You've heard from a couple of them actually today. And next year we'll be launching our first programs dedicated to the space sector.
Thanks very much, Chris. Now, Barb, across to you.
Myriota really got started by our founders who wanted to solve a couple of the biggest IoT challenges, which is access to a network to carry data and the expense of the networks available to carry that data. And they have come up with some amazing technology that allows businesses to have a device, and as long as that device can see the sky, they can send important IoT data for pennies. Now, that technology is ready, it's working, and my job is to actually get that technology to the global marketplace.
Fantastic. Thanks very much, Barb. And saving the best for last, Reg.
Well, not much of a build-up there. Thanks very much, Stephen. Look, it's a great honour to be part of the panel. Firstly, look, my chief executive, Richard Price, does send his apologies. He was originally scheduled to be on the panel. He's currently sitting in estimates, and I'm sure that he would actually much rather be where I'm sitting right now. I come from a slightly different background, initially 35 years in the federal government with Air Force, I suppose most of relevance is the last 4 years as the director of the Woomera Test Range, where I was involved with the Hayabusa 1 recovery, which is kind of exciting now to see the second one coming back in a couple of weeks, and some high-fire hypersonics. I moved to state government 4 years ago into Defence SA, and as one of the directors of the South Australian Space Industry Centre. And so we've had a fairly strong role in not only developing the strategy for the state and implementing that. So we don't directly deal with the venture capital as much, other than more we are working with the small companies and the startups that are actually need that access to venture capital. And I'm also chair of the Southern Launch Task Force, which we'll talk about a little bit later on when we get into the practical difference that the state government, I think, can make towards the sector.
Great, thanks very much, Reg. Now, I think for attendees, hopefully what you can see in terms of what we've pulled together here as a group of panellists is certainly the US and international perspective, linking that in with the Australian perspective with investment, the pipeline through incubators and accelerators, the perspective of a VC-backed scale-up company, and of course then government in terms of creating the environment to help support the success of all the other activities going on. Letitia, I'm going to start with you if I can. And you've talked about SpaceX, Escape Dynamics, Global Space Ventures. The US in itself has a very long-standing history, both in space tech development, but successful commercialization. What are some of the general trends, if I can put it like that you're starting to see from US investors' perspective?
So I'll touch briefly on two new trends we're seeing in the US that are noteworthy for the sector. The first one is that we're seeing national security space embrace commercial space. The Space Development Agency, which was launched at the end of 2019, was specifically formed to field critical space technologies and assets outside the normal acquisition process and at a more rapid pace. And they've already awarded a series of commercial contracts in a way that's somewhat inspired from one of the pillars of the In-Q-Tel model, which has been to repurpose existing commercial technologies and assets for national security purpose. For example, the contract they're awarded to SpaceX is to develop a new satellite bus for the Space Development Agency, which leverages the existing Starlink assembly line. So that's the first trend that we're seeing. The second trend I wanted to point out is that we're seeing SPACs rushing with large pools of capital that have become a new source of capital for growth stage companies and capital intensive startup in deep tech and in the space sector that want to move beyond venture capital funding. And let me just clarify what a SPAC is for members of the audience today who might have not come across the term before. It's basically a blank check company that goes public, raises money, and uses that money to buy a privately held company. So the first SPAC we had in the space sector was Virgin last year. And more recently, Momentus, which is expected to close at the beginning of next year. And this year alone, all sectors combined, we've seen 133 SPACs raising in excess of $50 billion. So really massive capital amounts, which has provided capital for those high growth firms, access for the retail investors that typically did not have access, for example, to investing in those emerging space companies. And finally, a virtuous cycle for the VCs, since those SPACs in some way provide also a form of monetization for VCs who invested in those high growth companies. So that would be the two trends I think are noteworthy to share.
Thanks very much, Letitia. And I guess between the might and horsepower of a SpaceX and the scale that's achievable behind these alternative funding sources, it's almost how do we compete with that?
Yeah.
Ulrich, just from your perspective in a national and Australian view of landscape, and I guess reflecting on your own portfolio, what are some of the trends that you're seeing in the similar sort of way as what Letitia's just articulated? And I guess if there's any experience or exposure to SPACs here in Australia, I'd be keen to understand that too.
Sure. Well, maybe I'll just maybe answer the SPAC comment first, and then I can talk about some of the more general trends, at least that we're seeing in Australia. Just to add to what Letitia said, certainly in the US, it's all about SPACs right now. In Australia, for folks on the line, the general equivalent in Australia of a SPAC is essentially a LIC or a LIT, so it's a listed investment corporation or a listed investment trust. And they've actually been pretty common in Australia for a very long time, but at like mid-scale, I think one of the interesting questions is going to be, will they, much like what's happening in the US, start to sort of level up in size for each individual, they call it. But maybe just talking about Australia and the ecosystem, the space tech ecosystem more specifically, I guess I'll probably break it down into like two areas. There's talent and then there's sort of sector trends. So in terms of talent, I mean, one of the things that just makes me so excited is the fact that I would say the last sort of 5, maybe 10, but probably more like 5 years, the quality of talent in Australia going into space tech has really gone through a serious step change. And, Australia's got a pretty solid history, especially in areas like B2B SaaS startups and companies like Atlassian and whatnot. And what I think is phenomenal is now we're seeing founders with much more deeply technical backgrounds, maybe possibly having been inspired by some of these successes in SaaS, sort of jump in to say, hey, how about we apply some of these modern sort of software startup methods and actually apply them to deep tech startups and things like space tech, which I just think is awesome. In terms of sector trends, so number 2, I guess I'll split it into early stage and maybe sort of mid or late stage. I would say that historically, obviously, in Australia, much like the US in many ways, for sort of mid-stage companies, a lot of investments gone into like satellites for communications, imaging, analytics, that kind of thing, as well as launch. And generally speaking, in the venture community, those two elements of the space industry are considered sort of more mature. I mean, parts of launch, maybe not, like, breathing propulsion, maybe not so much. Then when it comes to seed stage investing, I think one of the things that I spend a lot of time thinking about is what is next for the space tech frontier. So in the world right now, for example, we have 2,000, 3,000 LEO birds in the year globally right now. And what happens when over the next decade, that number blows out to tens of thousands, right? So what sort of support industries does that open up for the sector? And I just totally love meeting founders who are thinking very, very long term in terms of where is the space tech sector going.
Great. Thanks, Ulrich. Chris, across to you, and I guess reflecting on some of the comments and observations of Letitia and Ulrich from a broader sector perspective, how are you seeing the link? And sorry, I guess just also acknowledging that what you support through Stone and Chalk is broader than just space and deep tech, but that link between entrepreneurs and investors, is that changing from how you see it in the pipeline of entrepreneurs and young leaders coming through?
Yeah, I mean, Letitia's comments give you an absolute perspective of the scale, like US versus Australia. I think, echo Ulrich's comments around the talent pipeline in space in Australia. Really privileged to be around some of that talent. I think it's important to call out the investor side of that talent as well and the actual investment capability. I mean, for a lot of investors, space is a hard investment domain. It's few investors actually understand it, probably even less can add value. It's often binary outcomes, extremely long lead time in terms of fund realisation. But what we've started to see in the last few years is, investors like RightClick and others actually take a bit of a leap of faith and, through the process of, investing in companies like Myriota that you'll hear from in a second, are this really nice value transference of almost the education process between the investor and the startup play out. And there's been some really interesting examples of that in the startup community. So seeing investors, for example, leverage their expertise around things like helping an entrepreneur understand what is the total addressable market for this proposition. And it might mean that they're bringing in experts, Sabre Aeronautics has played a great role, for example, with some companies around actually understanding, well, what is the market for this proposition? And that sort of expertise up front is incredibly useful, particularly for an early stage entrepreneur. The second thing that we're increasingly seeing, and I think it'll become more prevalent, is strategic investment funds taking really a market-making approach to some domains of investment. I think a great example that's been quite active recently is Main Sequence Ventures. You know, they've invested in Fluorosat, Myriota, Gilmore, others, and are really looking at, well, you know, in domains of, you know, sovereign capability and with our understanding of actually what are the problems to be solved here, how can we help work with the market to almost direct the future pipeline of innovators, ideas, you know, great young space talent into areas that are going to be commercially viable. And then finally, I think, you know, there's been a real, you know, we're certainly in the early days of this transition to deep tech investment, really understanding the entrepreneurial community and vice versa. But we're starting to see almost a maturity on both sides. So, you know, things like space entrepreneurs understanding investment time horizons of funds, understanding different pathways for capital options, different structures like Ulrich mentioned. So it's really, you know, quite exciting to actually discuss today and also look at, well, almost what's the next evolution of this now.
Thanks very much, Chris. I guess just in terms of, you know, there's a number of different programs that operate in South Australia, whether it's Venture Catalyst or a number of different formats of hackathons and the thing like. How important are those, do you think, in putting the spotlight on this as a deep tech sector for the state and obviously then flowing or feeding that into what you're doing a Lot 14 in the broader network?
Incredibly important. I mean, you highlighted before, space is global. We're certainly not looking at this through the lens of a South Australian or even an Australian opportunity. And if we look at the domain of, you know, how do we map back to the Australian Space Agency's goals of tripling the sector? Well, that's going to need a lot of components of the space system to work. And a big part of that is actually helping with that pipeline or the critical mass of people, whether they're entrepreneurs, researchers, you know, SMEs that are looking to productize their propositions for the first time. You know, we know that space is a incredibly capital intensive industry. I think the stat is less than 10% of entrepreneurs are actually raising money from friends and family, which is very different to a lot of other sectors. But the role of, you know, accelerator programs, whether it be, you know, the great one that UniSA runs or others across Australia, as well as, you know, programs like Gravity that you heard from earlier today that are helping expose the real problem to be solved earlier in that journey, are just incredibly critical. And there'll be an increasing number of those opportunities for people as we find that, you know, there's never been a better time to build a space proposition. And, you know, smart entrepreneurs are actually starting to realise that the lower hanging fruit.
Yeah, thanks, Chris. I guess a bit of a follow-up open question to you and Ulrich on this. You've both pointed at talent. From my own experience of starting companies and raising cash, you know, technology is one thing, but ultimately you're really backing the people behind it. And from every company that certainly I've been involved with that hasn't gone on to be successful, it is really because of a people or a failure of human capital behind it. And so I guess I'm really excited and pleased to hear that both of your experiences have seen a real raising in the bar of that, particularly here in the Australian landscape. But I guess the question is really, is that to the detriment of other sectors, do you think? What is attracting that talent into this sector?
Ulrich, do you want to take that one first, or do you want me to jump in?
Go for it, mate.
Yeah, sure. Yeah, well, great entrepreneurs will be able to pivot into many industries. And I think, you know, you'll hear from Myriota shortly, and I'm sure Bob can share some of the diverse backgrounds that Myriota's team have come from as an excellent example. But we're seeing a really interesting wave now of, you know, when people think about space, they often think about, you know, the upstream capabilities, rocket launches, satellites. But particularly in the downstream space, you're seeing entrepreneurs that never actually thought that they were a space entrepreneur. But, you know, we have people here that are ingesting space data from an AWS instance to solve better catastrophic risk modelling or climate change predictions. And so we're actually starting to see this great evolution of understanding and, you know, fantastic people in product. You know, we've got a whole host of, I guess, the downstream supply chain inputs that are really important for teams to be successful. And yeah, ultimately, you know, the great entrepreneurs are looking to solve big problems and change the world. And what better industry is there to do that in than space?
Yeah, thank you. Well, Peter, did you have anything to add to that?
Oh, I would echo that. If you're looking to make a serious dent in the world, space is an amazing industry to do that in, right? And I think also when it comes to the increased maturity of the local ecosystem, 5 or 10 years ago, most founders in Australia there was just a very, very large percentage, I would say, of sort of first-time founders and founders who hadn't worked in a lot of startups before. And where that's changed now is you're seeing founders who have done 2 or 3 startups before that are actually coming back. And so there's this sort of much more deeply connected community of founders in Australia, which I just think is fantastic for everyone.
Great, thanks, Ulrich. Barb, cutting across to you, Myriota is a VC-backed company here in Australia with a good range of international investors. In earlier conversations with one of the co-founders, Alex Grant, one of the founding principles of Myriota was that it might be a company headquartered in Adelaide, but it is certainly a global business. And I guess you've come into the role as the Chief Revenue Officer, and Myriota has certainly embraced the virtual world of having a good number of senior folks scattered in different parts around the country, which is fabulous to see. But I guess I want to come back and just unpack your experience of coming into the company, which is not a startup anymore, it's certainly a scale-up, and what the influence and direction or value add has been from the depth of investors that you've got from around the country and internationally. You're on mute again, Bob.
That was even more brilliant, what I just said. My previous experience working with investors was back in the 90s during the first tech boom in the United States. And, it was almost like flipping houses, how they were flipping businesses. So the interaction that I have today from our investors and board is completely different and much more strategic and helpful, to be quite honest. And I'm seeing them committed more to the longer picture as well. It's a regular occurrence that our investors or board members are making introductions to me, or even at all layers of the business, connecting our clients, our partners. And it's really led to some amazing strategic alliances. For instance, the partnership that we have with Optus, introductions into the US defense primes, which can be quite a beast to navigate. We have board members, or we have people on our board and investors like In-Q-Tel. We have Pam Moyer, former astronaut, who are actively working to get us into that space. Also, you have investors like Right Click as well. So Ulrich and I just were on our call earlier today, and also Main Sequence of Ventures, where they're working to connect all of us, all of their portfolio companies, so that we can share learnings. So there's a monthly marketing head meeting. There's actually a grant session going on simultaneously for how to get access to the grants. So there's a lot of opportunities, and they're really open to it. I wanted to say one comment on talent. My whole background really is high growth companies. And for me, the biggest obstacle to that growth, you have to be, speed is, if you're not fast, you're not going to do it. But the second piece is leadership. So the ability to take people that are in the business and teach them how to be managers, or managers and teach them how to be much at an executive level with thinking. And as I was sitting over COVID with the other executives thinking about, we were meeting to build out a leadership development program, looking at the expense of it, looking at us not having the expertise in building out one of those programs. I was thinking that for a company like Main Sequence or any of the ventures, what a great program to offer to its portfolio companies. A proper leadership development program for all of their portfolio companies. And think about what that investment will do for that investor. They can move those leaders around their different portfolio companies and really breed strong leaders.
Yeah, very important. Great. Thanks, Barb. Reg, like I said at the start, saving the best to last from the round robins with questions. The role of government, as I sort of said in my introduction, is really around the policy framework and regulatory framework in terms of being able to support the success of a lot of these endeavours. And sometimes it might even be where government needs to get out of the way to let companies charge forward. What's your views and perspectives on how this sector has grown and the role that government to date has certainly been playing to support that?
Yeah, thanks, Stephen. It actually agonised when I was thinking about this question, because my natural default option is to go and do the bureaucratic, it's about jobs and growth, which it always will be for a state government, and then starting to try and compare it to all of our other sectors, ag and mining, and then defence, which obviously we scan or span both of defence and space. So our space strategy was just released this morning, and that comes up with those figures. And we used a standard set of how many companies, excuse me, direct value to the economy, 1,400 jobs, $140 million, and all of those statistics. And they're as valid as we can make them. But what really has, if I look at the two as the defence and space sectors, it's become very apparent that they are completely different for totally different reasons, and with advantages and disadvantages, and I'll talk about COVID in a sec. So historically, you can come up with growth figures, but we're starting from such a low base that you can almost go from hero to zero with one transaction. So our strategy, certainly from a state government perspective, is to just create that environment where not so much get out of the way, but to be a complement to both the national endeavours through the Space Agency, but our small company and our startup culture, which is very strong here in South Australia. And quite frankly, if I look at even some of my panel members here, so Barb and Myriota, Fleet, Innovor, and to a lesser degree Southern Launch, they didn't wait for the Space Agency. They were all up and running. And in fact, they were great drivers in what we've achieved as a state government, provided that framework for us to do that lobbying at the federal level. So the where to from here, I think some of the real learning points I've got out of this, so rather than go, can we achieve a 3% growth, which is the sort of state sector growth strategy, that's completely unambitious in the startup and venture capital world, but it's about 3 times what historically South Australia's overall state GDP has. So I try not to get involved in this, what percentage of state GDP or GSP is space at the moment, because it's as I said, it's kind of meaningless. So it's with that said, we've got to set our targets. The good thing is, I think we'll hit well above the 3%, and we will keep our strategy more aligned with the national agencies, and that'll hit us about $250 million, I guess, by 2030 is our strategy. I think we'll hit that well. Just one point I did want to make on COVID, without going into too much detail. It's really actually encouraging to hear all of the venture capital is actually thriving at the moment, rather than you're going into hibernation, because one of the things that the survival technique of the defence sector or defence industry was there was a whole bunch of federal legislation in place about defence industry policies and sovereign capabilities and national workforce strategies, which allowed the federal government to really pump prime the defence industry, and it kept it going through a fairly challenging time of COVID. And obviously we're still in the middle of that. The space sector and the Space Agency, obviously it's such a new agency, we really haven't got that higher level legislative framework or mature framework in place, and certainly the implementation of that. So during a COVID time, when you hit the COVID recession, usually the first thing to go is venture capital and R&D, and both of those are absolutely fundamental to where we need to go as a space sector going forward. So that's very much at front and centre of the mind of the state government in terms of where we put our focus on support. Not trying to pick winners and not trying to get slaved to particular numbers, which I think at the end of the day become quite meaningless in a sector which is so fundamentally different to what we're kind of used to as a government.
Yeah, and I guess it's creating an environment there that enables or facilitates everyone to succeed, and as you say, not picking winners.
Yeah, absolutely.
Letitia, I'll loop back to you, and I guess look at the pipeline here, we've sort of seen across from your opening remarks and those of Ulrich, right back to Stone and Chalk with Chris around incubating and accelerating companies. The pipeline there is always so important, not just from a technology development perspective, but also an investor's perspective. And I guess the question is really around how do you see, if at all, the role of VCs changing more generally to support the development of that pipeline and support it through from an early stage to a later stage in this environment?
Yeah, so I actually want to rebound on a point that was mentioned by Chris Kirk. Can you still see me?
Yes. Yep.
Yeah. Okay. Sorry, my computer was acting weird. So something Chris mentioned about lifetime of the fund, because it's relevant in some way in pipeline, because what you need to start with is to have capital that you can deploy into deep tech. And what we've been seeing is that VCs have been adapting to be able to pursue true deep tech mandates by solving the important disconnect that exists between the lifespan of a typical VC, which is generally 10 years, and the time span that it takes for deep tech companies to start changing the world. So think about SpaceX, that were started in 2002. We're in 2020 today. It requires time, patient capital. It's not like TikTok, which ends up being an overnight success. And an anecdote I often share is that when I wanted to invest in SpaceX and I told Elon, he only had one question for me. And it was, are you ready to not have a return for 15 years, not see your investment? And I said, absolutely so, but it was patient capital. And I was lucky to be able to invest my own capital. So I did not have to worry about a 10-year lifespan of a fund. And I think that's why we've been seeing a strategic investor, corporate VC, be active in deep tech and supporting space, because they have those longer time spans. And what we're seeing now on the VC side is more VC teams that are actually rolling out funds with a 15-year lifespan, which is much more adapted to those deep tech companies. So I think that by itself will allow more capital to actually support that existing pipeline, which otherwise gets really ignored for lack of being investable in some way.
Yeah, thanks, Letitia. I guess if you look back at the textbooks around venture capital investments, there's always one of the chapters in there about the alignment of goals from the founders and the investors. And I guess what you're starting to talk about is the shifting of those time horizons for when investors might want to see a return. I guess I'm curious, CVCs or corporate VCs do have a different time horizon, but they've also got a different reason to be at the table as opposed to another traditional fund. And sometimes that's to buy a seat at the table of the future if they're getting in early and then seeing where different techs are going. And sometimes it might be to acquire that portfolio company in the long run if it's strategic. Is there still friction, do you think, between those two different sets, and especially once you throw the founders in the mix there as well, as to how long they might want to be involved in the roller coaster ride?
Is that directed at me or?
Yes, it is. Sorry. Yes.
Well, so I think there is always a tension, and I think investors want to be in a position where they can offer those founders more runway and more commitment that is what those founders need. So I think it's not, investors are just tied up, right? They have to go by what their mandate is. So I think it's just great that there is now this flexibility, and they're able themselves to find LPs who are ready to be locked in for 15 years, because that's what it requires to go into deep tech.
Yep, great, thank you. Ulrich, what's your take on all this from RightClick's perspective in, I guess, portfolio management and keeping in sync with the life cycle of your fund, getting in really early as opposed to sort of some of the later stage opportunities you might be seeing that you're working through?
Yeah, sure. I think it's a very good question. So there absolutely in deep tech can be this tension between length of fund and the essentially length for there to be, amount of time for there to be a material liquidity event. And so, as Letitia mentioned, a whole bunch of folks are extending out the lives of their funds. So 15 years is not that uncommon now if someone has a serious focus on deep tech, or even to just have, it might even be, say, 12 years with a couple of years of extension, or 15 years plus one if needed. I think another point that can be important for founders to understand and to make sure they can kind of solve some of these potential misalignment issues is allowing investors, for example, to roll a holding in one company into the next fund. So it almost resets the clock is another way that VCs can kind of make sure that they're always aligned with the most ambitious founders and those long time horizons that are needed in deep tech.
I mean, there's certainly something that you see in biotech, for example, where you'll have follow-on funds available to continue to ride the value inflection points up as a new drug or diagnostic is progressing through clinical trials to essentially protect limited partners from early stage investing in those sorts of things, which it sounds to me like you're sort of.
We're actually seeing that as well in US VC firms at the moment for the ones that were invested in SpaceX and are creating rollover funds to be able to let those investment roll over essentially. Yeah.
Yep, thanks. I mean, you do have a mixture of different investment types from corporate VCs such as Boeing and Singtel and more traditional VCs insofar as Right Click and Main Sequence and others. Do you get the sense of any misalignment, or is there still sort of all elbows to the wheel? You're on mute again. 3 for 3.
I was trying to trick you. I haven't experienced any misalignment there with our team. They all bring something different to the table in terms of what they're helping us with and what they're looking at. The misalignment would be that we don't have access to the billions that the US does. So if you take the same company in the US, what they've received in funding with less infrastructure ready to go to market than us, that's the biggest challenge. So it's not necessarily our group of investors, it's the access to capital in Australia.
Don't worry, I'm coming back to that question in a second with others. Yeah, Kirk, there's been a bit of discussion around the virtual table here, I guess, at the different structure of investment approaches. And I guess angel investors, high net worths, more traditional seed stage investors and I guess more established funds. Are you seeing much of a change in dynamic of how those different investment types are interacting with companies you're working with and supporting through Stone and Chalk?
Certainly. I mean, we've touched on a whole bunch of different funding options. I think it'll be really exciting to see what the capital landscape looks like in a couple of years' time. But another thing I think that's really important to point out is, no two space companies are the same from a capital intensive or capital requirement perspective. We've got companies that look and feel much like a traditional sort of enterprise software as a service business that, quite mainstream investment or investors really neatly understand and can model back to, a more traditional fund or investment horizon. And then we have, really excitingly, just some bold, wacky, wild, I need an angel investor to write this check and tear it up because actually I believe in the dream and the vision and what this is going to do for Australia and the space industry. So there's really a full sort of life cycle of investment capability that some pockets of which are actually starting to take off, but certainly in the early stage capital market. So if I look at the 200 odd companies that we're supporting at any one time across Stone and Chalk's network. And as I said, we've probably had about $500 million or so invested into Stone and Chalk's companies and alumni. The traditional investor, and particularly at the earlier stage, either doesn't get or isn't well suited at the moment to these early stage investments in space. So I think it's a good segue to one, what needs to change to make that market work more effectively from both the investor and the entrepreneur's perspective. But then two, what is the role of other more unique capital sources? What's the role of international? We heard a lot about Japan today very exciting. They've got an absolute track record of backing some crazy, bold, flying shooting stars and all sorts of really inspirational stuff. But yeah, across the life cycle, as we get more and more companies playing in the downstream space, more and more companies looking to productize their existing service offering, and then, hopefully more companies leveraging the new capability that we've got here in South Australia to actually put stuff up in the sky. We're going to need all of these component parts working together really neatly. And I think there's a long way to go still on that front.
Yeah, interesting. Reg, we've been talking about the supply of great ideas and capital to come in to fund them and get them up and going. But the other element behind that is, of course, physical space, not just outside of Earth space. And the state government's making investments in Lot 14. And I guess, can you just talk to us, especially for the benefit of folks outside of South Australia or Australia who don't know much about what we're doing with Lot 14, can you just give us a bit of background to Lot 14 and what we're trying to achieve there as a state?
Yeah, absolutely, Steve. Look, and I apologise, I would just quickly jump back to, I think you did ask me the question about what's the role of state government, so probably lead segues into the Lot 14. And it goes back to something Barbara was saying before. I think one of the key things that state government and federal government needs to do is provide that leadership and commitment. And I think that commitment word's a really important one if we're going to actually realise the vision that both the Space Agency is doing and what we're doing at that local level. And that does take sort of that long-term bipartisan support. And one of the key things from a state government perspective is we're not used to dealing with startups. There are people who understand startup culture and we can all read the books, but it's not generally what governments have, and state government and federal governments have been used to dealing with. And so that's one of the things that we really trying desperately to do at the state level, is to understand what changes in our own thinking and our own process and in terms of that regulatory environment do we need to tackle to effectively get out the way. I think you used that comment before, Steve. Still have that regulatory requirement. We're still a regulator for the people of South Australia and Space Agency for federally. We just want to make sure that we don't have a regulatory environment that's designed for large space and trying to apply that to a small space where people really do need to move fast. The time it takes for a smaller company, they're gone before they've been able to comply with a whole bunch of existing legislation. So, but make no mistake, that is a large cultural change within a government organisation. And I sort of categorise it as state governments can be more agile but have less money. The federal government has more money but is less agile, and that just comes as a nature of size and bureaucratic organisational design. But we've really tried, so Lot 14 has been the physical manifestation of what we've been trying to achieve since we started getting involved in the space sector. And through things like the Space Innovation Fund. So we've got scholarships. It is about funding through the ICC. The Southern Hemisphere Space Studies Program has been running since 2011. It's all of those outside sectors. And when people ask, goes back to my first question, how big is the space sector? If we just add up the Myriadas and the Southern Launchers and the Fleet Spaces, it doesn't look very big. But the more you actually dig into space, especially when you're talking about downstream and where 80% of the funding tends to go, we actually have a really incredible capability across South Australia and across Australia in the space sector. It's just that we've never really been able to articulate that very clearly. And I think that's part of the game. So Lot 14, which for those that aren't in South Australia, haven't had the chance to get there, it's effectively the old hospital site, which has been completely repurposed. There was a massive change in the state with the closure of Holden's, and there was a sort of an emotional farewell to that's what we used to do is make cars. And I think there's been a very strong push from all levels, from both sides of government, and now obviously under the current Premier Marshall, we have to fundamentally change what the future looks like, and that's where I think that symbiosis between the small startup culture of space and where we need to go as a state to offer those jobs and growth. And state governments will always come back to their jobs and growth, but they are those high value, exciting jobs. Space motivates itself. We've got to make sure that there's those jobs and those opportunities in place that justifies that motivation. So Lot 14 includes the Australian Space Agency. It'll include the new Mission Control and the Discovery Centre. So it's got a very strong space focus at the federal level. The Cooperative Research Centre, and I know that they've all been covered earlier in the day. But it also includes, obviously, Chris lives down there with his startup culture and startup companies and pace up. But we've also got the Cyber Collaboration Centre, Artificial Intelligence. All of the universities play in that sector. And it has really been encouraging to actually see the leaning forward from everybody from major defence primes to people, companies that want to actually go and find out what's happening. And that was exactly the idea of the innovation hub. And there's the plan is just going underway now to build the tower behind. It is very much that collaborative space. And our job, I think, as a state government, and all we've done is really create again that environment. It is all privately funded and managed, all of the, even right down to the facilities being built. It is about creating an environment where people can get on and do what they need to do, and sort of, we throw Chris and Myriota, and we've got some of our leading space companies, including researchers. It's very easy to be sceptical about innovation centres. Every city's got one. But Lot 14, you only have to go down there, and there's 1,000 people on site at the moment with plans to be 6,000 people within 5 years. You kind of know it's going to work. So it's been an investment in support and leadership and commitment, as well as some initial funding. But the idea, obviously, is that from a state government perspective, we really want that site to work, because it is going to drive not only the high tech in the space sector, but all of those adjacent sectors that are going to be the users of this tech, because there's no point developing stuff if you don't have that customer base. And it's going to be right into the ag sector and into the mining sector. And I think, just last point, you saw the Gravity Challenge presentations last night. I just think it's super encouraging to see, obviously, the centre of gravity being in Lot 14, but the percentage of people that got involved in those challenges that have been welcomed by the companies to continue on and actually take it to that next stage. Because innovation is actually the easy bit. It's productising, commercialising, and having customers at the end, which is going to drive the sector rather than a good idea.
Yeah, thanks, Rich. I guess my view on that is certainly there's three legs to the stool insofar as bringing companies and government and university, both students and research capability together in that precinct to drive an environment to support each of those elements you've just outlined. The shadow that Lot 14 casts has to be much bigger than its 7-hectare physical footprint on North Terrace. And so I guess just linking Lot 14 up with other initiatives, be it in the state or across Australia, will be the interesting next thread to that bow, I imagine.
Yeah, look, very much, and I don't want to steal too much time, but I mean, we did release the new strategy this morning. So, the answer to this question I initially put down as implement the strategy, because we put all of our thinking really into that document. I know it sounds a bit glib, but it really, both from a research, development and innovation perspective, working out where those game-changing levers are that goes back to that creating the business environment that allows all of the innovative companies the best chance of being successful. Are they all going to be successful? Probably not. But we want them to have the best opportunity of taking a great idea and commercialising it and growing, because obviously that then meets the state and the national goals in the space sector. So,
thanks, Letitia. What you're hearing here is a lot of investment, both by the state government and the federal government of Australia, into Adelaide City here in South Australia, with the Space Agency, Mission Launch Control, and other initiatives, and all sort of predominantly epicentered around Lot 14. But we're not the only country investing a lot into space and deep tech areas, and in terms of enabling it. And I guess I just want to open up the question around international collaboration and what that means from investable technologies that might be coming through that pipeline. And are you seeing much of that from an international US perspective?
So I think we've seen a lot of countries heavily invest in their deep tech capabilities. It's really wonderful to hear about Lot 14 and what you're doing in Australia. Outside the US, I would also point to France, which developed a very comprehensive deep tech initiative through their public investment bank, BPI, which is backed by somewhere on the order of $2.5 billion of public funds, so quite sizable for them. What we've not seen for now, I think, is efforts to collaborate and aggregate those capabilities. And by that, I mean the idea of the US, Australia, other allies like Japan coming together to collaborate and respond to the space and cyber components of China's Belt and Road Digital Initiative, and offering together innovative space capabilities, cybersecurity assistance, you name it, as an alternative to what will otherwise likely become a reliance on Chinese space systems and communication networks. So I think that represents a key place for collaboration. And I think that's something we're going to see over the next 4 or 5 years.
Thanks, Letitia. Ulrich, I guess, we've commented on the changing landscape of venture investment here in Australia, and groups like Inkitel, predominantly or otherwise epicentered around the US, but having now a branch here in Australia and being quite active. That level of maturity or maturation in the broader ecosystem from an investor's perspective, and the internationalization, are you seeing much coming through from what you are working on?
Yeah, so I think one of the things that certainly we've noticed the last probably 2 or 3 years is, for a lot of US VCs, Australia is getting put on their radar and on their map. And so it's become a lot easier for founders to get sort of bigger follow-on rounds from US or international VCs, which is, I think, good for founders. What I think is also good for founders is the size of Australian VCs has been growing and growing the last sort of 5 years or so. And so now founders have even more choice. They can genuinely receive pretty sizable follow-on rounds in Australia for much longer than in Australia, say 10 years ago. If you were looking to do almost a Series A or Series B, you had to go to the US. Whereas now they might start kicking in at sort of Series E, and even then people would argue with me and say, no, you can still do that from Australia.
I mean, I want to pick up a previous comment from Barb just around valuations, and get your views on valuations achieved for companies at various rounds here in Australia as opposed to what might be achievable, particularly in the US market. From my own experience, particularly in predominantly focused in healthcare and biotech sector, valuations achieved through fund managers in the US can be astronomically higher than what might be possible here in Australia. And I guess just your thoughts and experience in that area.
Yeah, well, when you talk to VCs about valuations, you talk to 10 different VCs, you get 10 different answers. 10 different valuations. Yeah, so from my perspective, I'd actually say that, and I've done analysis on this as well at a high level, that generally speaking, valuations from sort of seed through to about Series C are roughly the same and roughly in line when you look at the median compared to Australia versus the US. What I think sometimes happens, though, is that the media gets very focused on the outliers. And those are the things that get put in the paper. And then people sometimes develop a view that valuations can be very different between Australia and the US. But generally speaking, it's not so much the case. It was the case about, like when you look at PitchBook data and so on, sort of 5-7 years ago, there was a gap in seed stage valuations. But that gap has essentially, on average or median, closed at this point. Yep. And certainly we're not seeing any drops in valuations during COVID either, for what it's worth.
I mean, I guess as the area starts to emerge more in Australia from a technical development capability or perspective, as well as attractiveness from investment, are you as a fund or a fund manager getting earlier involved in technologies to have a better feel for what's coming through the pipeline, or even investing at an earlier stage?
So RightClick's always invested very, very early, but to your point, there's absolutely a mega trend of VCs in Australia for sure, and I think in the US, I'm not sure so much about nowadays, but going earlier and earlier and investing earlier and earlier in space and other deep tech sectors, which some of the benefits of founders there is that if that continues in Australia, perhaps that will help fill some of the gaps that have been left by angels the last couple of years, maybe.
Yeah. Thanks. Chris, just changing tact a little bit. In the opening statements, I talked a little bit about some of the possible tensions for deep tech companies and investments where they might be developing things with a predominantly defence-related application, which might limit civilian markets. And even those sorts of technologies with a single customer base. Can you talk a bit about the tension that you have experienced there and seen there in some of the companies you're working with to support?
Sure. I mean, we've touched briefly on, I guess, some of the dilemmas around space tech investment as a category and, the traditional VC market looking at things like scalability, repeatability, multi-customer, all being important things in terms of, I guess, ultimately the target market and the valuation of the company. I mean, international is a really important piece of the capital market for many Australian space tech companies, but we're certainly seeing an education gap and a role that the SASIC and others are playing to their credit to help companies understand the implications of who they're taking money from, particularly upfront before they make investment decisions that actually could limit, commercial pathways. So, the US is a great example, lots of money, but also ITAR and a whole bunch of restrictions to comply with. And certainly, for a portion of space companies that are working in, single customer applications or defence-heavy applications, there's a real tension around going from grant to grant and hoping for defence as the lead customer, and I guess the time horizon and risk horizon that entails, versus trying to speed that process up and balancing what is a really can be quite a difficult decision set for an entrepreneur around speed, scale, focus, and not closing doors early that you actually haven't thought of or might have second, third order tier consequences down the track. So that's the real role that the investor community, government, accelerators, incubators, and others, and also companies like Myriota's and others that have been through this quite complicated let's plan out capital for the next 5 years mode, but incredibly important, and will become increasingly important as we start to get into building Australia's sovereign capability, helping to build more companies that can play into the defence supply chain, etc.
Thanks, Chris. Letitia, is that something that you've experienced or comes up as some areas of concern or consideration when you're looking at the portfolio and investment opportunities?
In what respect, Stephen? Can you elaborate a little?
In respect where you might have similar single or limited customer applications for a tech that the company might be developing.
Yes. So, I mean, it does. I think if you expand it to sort of characteristic that make an investment case compelling or not, anything that's single product is, I mean, depending on the risk associated with the product or the customer that is using that product, the customer base, that is definitely not a great thing to have going for a business when you build your investment case. So yeah, I would think that's definitely an issue. If you want, I'm happy to expand further into what are on the other side strong characteristic of a compelling investment case, or we can leave that to later or questions if that arises.
I might just actually come back to that because that's one of the sort of closing questions I have before we move to the audience questions, just to get your insights there. But just before we do sort of move in that direction, Barb, the element of investment that we've been talking about here, both from countries investing in deep tech capability, the level of increased attention on space as being an attractive industry sector to work in, reflecting upon that and the traction you're trying to get with Myriota's product in global markets, how much has that helped to get doors opened or things like that when you can tell people they're plugging their individual rainwater tanks into internet connectivity through satellites or rainwater pumps and the like? 4 from 4.
Been staring at that mute button the whole time. It's a fun place to be. It's definitely sexy. You know, people want to talk about it. The press wants to cover it. The press coverage we get blows me away. And I think the team that is behind kind of that brand and our brand in the press has done an amazing job getting that exposure. When we're talking to clients, everybody's looking at it. Everybody is thinking about this coming. And, the biggest obstacle is just get them to do it. But I imagine what Mariota would be like without the space hub and the space ecosystem in South Australia behind it. It would be kind of a lone Trojan horse out there. So I think it's been amazing, the support that the whole ecosystem has given and put behind Mariota to a technology that is sexy to people, but it's got meat behind it. And we have investors that believe in it, investors that have repeated investors. And I think that's why our voice is so loud. And besides the fact, the technology is pretty damn awesome.
Little sales pitch there at the end. Thank you. I do want to make sure we have time for some of the questions from the audience. But Letitia, I do want to come back just to your final point around the counterpoint there as to what does make for the attractive investment. And I guess general statements, but also words of wisdom and advice or experience that could help our listeners across Australia developing companies.
Of course, happy to, especially as I've sat on both sides of the table. So I'll focus on the characteristics that are most often missing, because I think one thing we've heard on the call, talent matters. We know that market size matters. We know that it's well understood. What often is missing is two things: market traction and engagement. And the other one is clarity of purpose and clear, unique differentiator. But let me elaborate a little bit on each. So market traction and engagement is generally a very, very strong indicator. And so Barb, that means you're in the leading role, like your role at Mariota is really critical. Being able to show arm's length customer contract, and I'm saying arm's length, not contracts or anything that's subsidized, because no investor wants to be in the business of having to predict how long, that company may receive subsidies for. And for those that don't have market traction and engagement, and it's really difficult to be in that position and attract capital, but at least being able to show that you have rich and ready customers. So customers who are able to afford can move fast and avoid any model where there is anything in the way. So for example, whether it's a required change in the behavior of the customer, it's generally difficult to get. The need, for example, to work with channel partners that tend to not be so great at new product evangelism. All this compounds your risk and makes your investment case less and less compelling. So that's the general point on market traction and engagement. The second one, clarity of purpose, clear, unique differentiator. I think we all know that any entrepreneur or team should be able to quickly describe what their company is doing in the unique sustainable value that they're offering to create in the marketplace. But what is often missing is a clear value proposition over the existing incumbents. So for a lot of the space companies these days, it might be, how do you do something that's so much better than Iridium or Orbcomm or Globalstar? And the other thing is a clear value proposition over the competitors. So if you look at, for example, new satellite IoT constellation, we can probably all name something like 20 companies that are pursuing this. And honestly, investors are lost, and teams have a hard time making the case of why what they are doing is different from A, B, or C. And so I think that would really, those two are really what I would engage anybody to focus on.
Thanks, Letitia. I recall from one of our earlier conversations, your sort of point there was, well, what are you doing that SpaceX can't? and that sort of mindset of understanding that regardless of your size, you're still taking on the big behemoths. Yeah. Ulrich, in terms of your perspective on looking at the Australian landscape and reflecting on Letitia's comments, I presume or imagine that your filter is not too dissimilar, but putting on the grand scale of a global economy, how is that approached at Right-Click?
I'd actually echo what Letitia said there in terms of what's where we see a lot of founders and companies sort of tripping up. Maybe one extra thing that I'll add is when it comes to space tech, VCs will drill a lot into the capital efficiency of those startups. I mean, in a sense, if you're doing communications via, old school, to give an example, via old school cable, it usually doesn't attract VC because of the capital intensity. But via space, it can, because once you do the equivalent of like laying a cable, or you put your birds in the air, you have this amplifier where you can potentially service the entire planet. And so, my strong advice to any founders in the audience would be to be very, very clear on at any stage of the business that you're at, why are you more capital efficient than the competitors? And that doesn't mean that you shouldn't necessarily raise the biggest rounds and go hard, but because a lot of space tech companies absorb so much capital, when you are capital efficient behind the scenes, it's actually an amplifying advantage.
Great, thank you very much. Look, I might move to some questions that we've got from the audience that have been coming through the online portal. We've got about 15 or so minutes to go before we close out. And one of the questions we've got here is about identifying the gaps that exist in the Australian innovation and investment ecosystem that might inhibit startup growth into space systems for space companies that might not exist for companies like Atlassian and Canva. And so I guess from those two companies' perspectives, being the unicorn sort of poster children of the Australian ecosystem, what is it that we can do, or where do bottlenecks exist to make sure that our space companies here in Australia can also go on to be successful as those guys? I guess I'll open that up to whoever's feels their best place to take the first shot of it. Might be Chris from your perspective.
Yeah, sure. Yeah, I mean, it's a collective effort. There's going to be no one single initiative that's going to solve capital landscape in space tech for the next 5 years. I mean, talking from the role that we're playing, for example, with various state governments, so in South Australia, in New South Wales and in Victoria, we work hand in hand with the government to look at, okay, well, let's actually map the capital landscape and apply that back against different sectors. So I know as part of SASIC's strategy, capital is certainly being considered in terms of, well, what are the gaps in the pipeline? And for example, at the early stage, do we need to be providing more efficient access to funding opportunities? And then the other point I'll make is that, ultimately this is a free market, right? So where there's great ideas, money and investment will come. So, it won't be a clear cut, these are the gaps and this is how we solve it. It'll be a collection of creative, strategic, VC, bold investors who are willing to take a punt, and entrepreneurs doing what entrepreneurs do, and thinking creatively about how they can solve the gaps in the market while they're there.
Thanks, Chris. I guess that's the incubator accelerator sort of view of that challenge. I mean, Ulrich, do you see anything from an investor's perspective?
I'm very, very bullish on where Australia's space tech ecosystem is heading. So there are not really obvious gaps that spring to mind. I will say that there's the support of a whole bunch of different government programs, be it at the federal level or at the state level. I have really seen up close that be the difference with a lot of sort of very successful startups between success and failure when they're going through a tough spot. When it comes to things like R&D tax incentives, programs like that have been really sort of phenomenal for the ecosystem, and would certainly encourage that those kinds of programs be continued.
Stephen, can I just throw in a comment there, obviously from the state government perspective? It's not unique to the definitely not unique to the space sector. And it's something which we're seeing in the various programs in the defence side. I use that as the analogy, is that all of those sort of low TRL, early research, Defence Innovation Hub for that capitalising and productising and then getting into the market, they're all there. It's more the coordination between the various programs that I think is the issue more than are those various programs available. So I think certainly from the state perspective, we try to look at the whole end-to-end type program, but traditionally Australians generally appetite for risk is quite different. We always look at the US as their profile and, that's how we'd like to be, but our appetite for risk is quite different. So I think one of the functions within government, and I go back to the point about legislation and process and those sort of things, is part of our role is to change that. We can't be throwing money, as I said, we're dealing with taxpayers' dollars every day, but there is a point where acceptance of risk allows us to be more agile and actually, fill in some of those gaps and make sure that these things are progressing from the very early stage research and then actually, but rapidly. And rapidly and government don't always go together. And that's I think, one of the cultural pieces that we need to work on. And we've seen that through the Southern Launch Task Force, working with Southern Launch. We've still got a regulatory function. We still have to go through a process which is all about environmental, and absolutely correctly, all people in South Australia get a chance to have a say in that. But we've brought people together from every department into a room, and I get them together every 4 weeks and just say, what things could we do in parallel? It's just a change of thinking on how we do things, because we've got to recognise that we're not dealing with very long-running, very cashed-up companies in a lot of cases. And to sort of change that environment so that all of these companies have got their best chance of surviving without getting bogged in bureaucracy, is we need to have that change of risk appetite within government, both state and federal. And more than that, we need to work across state and federal boundaries to make sure that we're doing this as a nation. I know that sounds glib, but I genuinely believe it's the only way we're going to make this work. There's plenty of money out there, to be honest. It's just a matter of accessing it at the right time.
And I guess also, Reg, one of the other government initiatives is government as first customer, which is, again, I think, managing some of those risk elements or engaging with small or startup companies. Barb, from your perspective, lived experience, bottlenecks that might be slowing Myriota down from becoming a unicorn?
Do you mean specific to investors?
Yeah, well, I guess the ecosystem more generally in Australia. The audience question is really around how do we make sure we can support companies through this industry sector to be like the Atlassians and Canvas?
Yeah, it's interesting what Letitia had said about channel. We definitely have channel requirements with Myriota. We need companies out there making devices that are enabled to connect to our network. And that piece, especially as this is new technology, new frontier, that is challenging to get people to make that investment in creating those devices. And, if we look at opportunities for investment from the state or federal side, is, more of an access to cash scenario where these companies are partners who may not be directly space, but they're creating an IoT device that will connect to the Myriota satellite network, that they can then they can accelerate their path to getting to market. And all of those Australian manufacturers are taking those over to the US as well to sell. So it's a huge export opportunity. So it's not an obvious, let's fund Myriota. It's let's fund those partner channels that are Australian businesses to allow them to make the devices that together creates this ecosystem.
Great, thank you. Just picking up on the comment you made, Reg, about risk appetite and linking it really to another question from a member of the audience, Letitia. It's really one from you, and it reflects back on the mindset of investors for longer time horizons. And again, through the lens of risk appetite and portfolio management, what are the lessons learned that you think exist that could help shift or evolve the mindset of investors in Australia here?
It seems from what Ulrich and others mentioned that there are already funds with that longer lifespan in Australia. So it seems that your already lifespan needs to be increased. And as we discussed as well, there are other mechanisms like the rollover funds, and now with the advent of SPACs, in some way, the lifespan may become less of an issue if the SPACs continue to take hold, which, you know, it's been a big, fast trend, but let's see also how long that lasts for, because, and let me make a little parenthesis on this, because we talked about valuation a little bit, and I almost jumped in at that point when Ulrich was commenting in general on valuation, because what we're seeing in terms of SPAC in the deep tech sector, there's a giant disconnect between those valuation and the private market valuation, way bigger than when you look at SPACs that have been in biotech or SaaS or other tech sectors. And so, again, I would put some caution here as to, you know, where we're going with this. But so I think, you know, I think Australia seems to be taking all the right place. I mean, I'm not, in terms of risk mitigation, from the investor side, you know, if your capital is locked up, you have more time to help and make the introductions that Barb was telling, you know, her investors are making and that we're all making to our portfolio startups. So no particular, you know, nothing in particular to warn. I think more if the person asking the question is an entrepreneur, I would say the biggest thing for the entrepreneurs to worry about is, what is your time to revenue? When are you, how quickly can you get to revenue so you don't have to worry about your next capital raise, and that at some point you become, you know, cash flow sustainable and can finance your operation from your own cash at the sort of as a backup scenario in case the capital market close up and are not open for you any longer. I think that's like the best position for any entrepreneur to be in, is knowing that, you know, if those capital markets are open, if VCs are, you know, there's tons of capital, let's go for it. But if not, we can still survive. We will make it through this rough pass because we have stable revenues. So that's sort of, I would think, the one thing to think about.
Yeah, wonderful. Thank you. Look, we're coming into the final minutes of our session here. And so I guess I generally open it up if there's any closing remarks that anyone would like to make around the virtual panel here before we bring it to a close. No? Well, look, I do want to thank you all for your participation in this panel. It has been a really wonderful, dynamic and informative discussion, particularly to you, Letitia. Thank you so very much for staying up late your end, which must be pushing close to 11:30 New York time Tuesday evening. So we really do appreciate your participation here and insights here into South Australia, the nation of Australia, and the broader audience. And also thanks very much everyone around the Zoom table here for your contributions to the panel discussion. I hope the audience has enjoyed it. And I'll pass back to you, Carolyn.
Excellent. Thank you so much, Dr. Ryder. That was a very intense session over that period, but it just goes to show, I think, the momentum that's behind the space area. Just how long will it take for other industries to come on board with that, and for then investors and venture capitalists to really be able to see that 15-year investment is going to pay off in the long term. So look, for me, that's a really exciting way for us to actually take another break to start thinking about a little bit about investment and what that actually means for the industry and for space as a general segment of the industry. We're going to come back in about 35 minutes, and it's going to be for our last session. So thanks everyone for sticking in there, and we'll see you again in about half an hour.